DeversiFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
What's up, guys? Just want to take a quick break and tell you about our sponsors for DeFi Slate. So first, we have 𝗵𝗶𝗴𝗵. 𝗵𝗶𝗴𝗵 is an all-in-one DeFi yield farming platform. They actually offer dollar cost averaging into Bitcoin and Ethereum uncollateralized loans. And their mainnet just launched. It's called Delphi, and they actually just filled it up to a cap, and they have governance launching soon. Check out 𝗵𝗶𝗴𝗵.io for more. And then we have 𝗵𝗶𝗴𝗵. 𝗵𝗶𝗴𝗵 is the first decentralized perpetual swap exchange. They offer up to 10x on Ethereum perpetual swaps and 5x on Link, as well as Lend and SNX, completely decentralized trading. Check them out on 𝗵𝗶𝗴𝗵.io. Both these platforms are extremely active in the DeFi space, and their protocols are growing, and the users are as well. So check those out, and we'll get right back to the podcast now. What's going on, guys? Welcome to episode 10 of the DeFi by Design podcast. We're here today with Ben and Ross from the DeversiFi team. I'm also here with my co-host, Rob. DeFi has been heating up lately, been absolutely nuts. It's honestly really tough to keep up with everything. Rob, how you doing, and how you been keeping up?
I'm good, Andy. I'm good. Definitely excited to have Ben and Ross here on DeFi by Design today. You're certainly right. DeFi has been heating up. I think lots of things are coming full circle. We're seeing 𝗍𝗍, a lot of other meme coins kind of continue evolving down the DeFi life cycle. So it's going to be exciting. I'm really interested to hear what our guests, Ben and Ross, have and what they're working on over at DeversiFi. Ben, how's it going today? How you doing?
Good, thank you. Yeah, it's great to be here as well.
And Ross, how you doing this morning? I guess it's morning where I'm at, but our friends here are across the pond. So how you doing today, Ross?
Yep, all good from across the pond, thank you. Just trying to keep up with all the stuff that's going on in DeFi. It's more than a full-time job.
Yeah, I mean, how cool is it to be connected across the pond, as we say, through some decentralized assets and finance, just completely random that we're even on this podcast. And I'm super grateful to be able to dive in. So just a real quick primer for DeversiFi, and you guys can fill in the blanks of what I miss. Effectively, what we're looking at is a decentralized exchange that has almost centralized exchange capabilities with their ability to trade and liquidity and slippage and all sorts of mechanisms to effectively bring a extremely great UI and platform to the decentralized exchange world. So if you guys want to hit on real quick what DeversiFi is, kind of what it does and what the unique value is.
Sure. I mean, I can give a quick intro to that, and if I miss anything, Ross can jump in. But I guess our goal at DeversiFi is to create a self-custodial exchange that can appeal to serious traders. So we spent some time on the research and development phase kind of thinking about what professional traders need, what they can't sacrifice, and what they're interested in when it comes to DeFi. And we kind of found out that whilst many of them like the idea of custody control and the kind of freedom and the speed and everything else and the privacy that comes with that, they weren't able to really sacrifice what they currently get on centralized exchanges. So the only real way to increase adoption of DeFi in terms of exchange technology would be to create an exchange that can compete with centralized ones on the key cornerstones. So privacy, speed, liquidity, low fees, choice, and the rest of it. So that is kind of what underpinned our approach to DeversiFi. We teamed up with StarkWare to build one of the first layer 2 exchanges, and that allows us to offer those cornerstones with the additional benefit of self-custody, right? So, withdrawal time certainty, we can never interfere with a withdrawal or deposit, and traders have complete choice of over their funds. But on top of that, DeFi has all these other cool things, right? So lots more features can come from stuff like token utilities. So along with those core features of DeversiFi, we've also got the Nectar Token, which kind of sits on the side. It gives traders who hold Nectar more say in the future of the ecosystem through the Nectar DAO, which is one of the largest DEX DAOs in the space at the moment. It's got 17,000 ETH pledged, as well as things like fee discounts, which are coming soon, and some other really cool utility, which I can't actually divulge on this call, but I think the space will be quite excited by.
Awesome. Yeah, that was a lot to unpack, but I certainly am on board with, first and foremost, the capabilities of StarkWare. From what I understand of StarkWare, it's effectively like an L2 solution, if you will, where, it takes away Ethereum's blockades of transactions per second and whatnot. And basically there's that ability for like a plane to have all these transactions in it, and then the plane takes off and flies back to the layer one blockchain and is able to like process those transactions. But because it's done off chain, there's the ability for them to be done quicker as well as with less fees. Kind of reminds me of the zkRollup concept. I know they're kind of similar, and that's a super interesting idea to have created the exchange on that platform.
Yeah, that's exactly it. It's similar to a zkRollup with a few subtle differences. So all of the trades that are done on DeversiFi, which is an order book exchange, are cryptographically recorded. We can do thousands of transactions per second. I think it's been tested at over 9,000 transactions per second. And then at some point, all of those trades are grouped together, and a proof of all those trades are submitted to the Ethereum blockchain. So that's when we call it settling. And that means that we can do incredible transactions per second off chain, but still maintain the security benefits of the main Ethereum blockchain. So we're not using a side chain or another form or variant. So traders get high throughput and they get the security of the underlying chain. The small subtle difference to a full zkRollup is that when we were researching what serious traders need from an exchange, one of the quoted requirements was privacy. Serious traders, quant firms, don't want to have their trades reverse engineered. They don't want people to be able to interrogate what they're doing. So we chose to store that data off-chain using something called a data availability committee, which is a group of 8 well-known Ethereum companies, such as Consensus, Nethermind, StarkWare, DeversiFi, Bitfinex. So all of these guys are trusted with the data, which means that the data is held off-chain, it's private, but then if the nuclear scenario was to happen where DeversiFi and StarkWare were to go offline, traders can always get their funds back by making one of these data availability committee members publish the data on-chain. So it's the best of all worlds in our opinion.
That's something that I guess I tend to see a lot in DeFi and crypto overall, is the synergy between a lot of different protocols. And it sounds like you're, using some entity for data and then, an on-chain component as well. Can you talk maybe about some of the synergetic relationships you've built in DeFi? It's pretty cool. We've had a couple podcasts, and the sentiment seems to be really preached each time is that crypto and DeFi is not about competition. It's much more about collaboration. What have you guys kind of seen in that regard?
Yeah, definitely. I think we're still quite at the early stages of our journey. We definitely see DeFi space as one of the amazing things about DeFi is that it's so collaborative. So one of the points around layer 2 is that layer 2 isn't composable with on-chain applications yet. So that's one of the sacrifices. It means you can do very, very high throughput, lots of transactions per second off-chain, but it means it's quite difficult to link that to on-chain activities in the same transaction. So you hear a lot about composability being one of the main sort of tenets of DeFi, and that's something currently that we're missing. But within 4 to 6 weeks, we'll be able to enable that on DeversiFi. So traders will be able to have the best of all worlds. They'll be able to use their layer 2 balances, but also make conditional trades. So essentially composability on chain with other various DeFi protocols, which will open up a whole world of new possibilities that we've never seen before. So that's very, very exciting.
And 4 to 6 weeks, is that a result of Ethereum scaling and improvements, or is that DeversiFi? Or DeversiFi, excuse me.
So that's a DeversiFi and StarkWare feature. So what it will be, it's starting life as instant withdrawals. So one of the main issues at the moment with layer 2 exchanges is you get all this fantastic throughput off chain, but then moving your assets back onto layer 1 takes a little bit of time, just while the system updates the state. And at the moment on DeversiFi, that's done every few hours, which for a serious trader, if you're happy holding your balances on DeversiFi, that's great. But if you're an arbitrage trader and you want to move funds quite quickly around the ecosystem, that's too long. It's not good enough. So we've worked with StarkWare to build this feature, which means that traders are going to be able to instantly withdraw their funds using a conditional trade, essentially. So they can take their funds that are on the layer 2, make a conditional trade, and then we'll essentially give them a float, which they then use to go off and do all their other trading. And then at some point, we settle behind the scenes, all in a trustless manner. And that's really, really cool because really then DeversiFi will be the best of all worlds. You'll get fantastic liquidity, high-speed trading, the security model of Ethereum, but you're not sacrificing the speed that you're used to withdrawing from on-chain DEXs like Uniswap, where you can instantly withdraw, or even centralized exchanges like FTX, where you can get your funds out within a few minutes.
Those capabilities are certainly going to make a difference, and I think it's a big race right now. While it is collaboration over competition, I believe we're in a race of who can get the best scaling solution for a DEX right now on layer 2 and get the most users, because ultimately what people want right now is less gas fees. Traders, every farmer, they want the ability to operate with less gas fees, and it's been a strong push to who can get that and who can do it right and well, and then who can attract the most users to their platform by offering, that kind of ability.
Yeah, definitely. And I think we've only just started to see people get interested in layer 2. Layer 2 was always this kind of abstract concept, and it really, DeversiFi and Loopring were the first products to really launch on rollups this year, only a few short months ago. And then we had this wave of DeFi yield farming, and people they do not want to pay the crazy gas prices. It's prohibiting a lot of experimentation and pricing a lot of people out. It's even driving people back to centralized exchanges so they don't have to pay these high gas fees. So I think we'll start seeing more and more layer 2 solutions coming to market in the form of zkRollups or Validium, which is what we are, and in the form of optimistic rollups, which some other products are exploring as well. And then what I think is really going to be really interesting is bridges between all these different layer 2 solutions. So imagine a bridge between DeversiFi and DYDX, which is another decentralized exchange, are also building on StarkWare. So in theory, it should be quite easy for traders to transfer between DeversiFi and DYDX without having to go back to main chain. And then imagine if there was a bridge between DeversiFi and Loopring, or DeversiFi and an optimistic rollup. In theory, your funds never need to touch layer 1. You can trade gaslessly for very low fees, but still maintaining the security benefits of the Ethereum blockchain. And I'm very excited to see that. And I don't think it's too far away. I think we'll start to see this within the next 6 months for sure.
That's awesome. Yeah, because everyone is looking for cheaper gas fees. And I think that concept is actually getting proven as we speak with Binance Smart Chain. It almost seems like they took DeFi and they put on their own centralized twist to it, which, of course, lowered gas fees. And everyone is really flocking.
But that burger swap UI is trash. Absolute garbage,
really,
man.
I haven't used
couldn't
it myself
even
yet.
Operate it on Google Chrome. Wouldn't even load. Just garbage. But I don't know. There's probably still opportunities for it. To me, it kind of seems like it's the first wave of DeFi on Ethereum, but DeFi on Binance. So the first early adopters are gonna be rewarded because they're taking a risk, they're taking a chance, they're doing something new. Yeah, but it was just trash. I was like, wow.
Yeah, I haven't used it, but if it does limit fees, that could see kind of a short-term spike before a lot of layer 2 solutions get out, which just kind of even more speaks to how you mentioned it was a race. It seems like everyone is racing to provide feeless trading in a decentralized way, and there are some that I guess are farther along than others.
Yeah. Ross and Ben, how do you guys feel about Binance and FTX? Now, you don't have to tell me your exact opinions on SAM and CZ, but kind of you guys are building what I would say is, obviously right now they coexist, the SEX and the DEX, but at some point, if this whole idea of being bankless and being decentralized is going to come to fruition, the DEX is going to be the only way of trading. That also could be false, but how do you guys feel about SAM and CZ and kind of the SEX world? Is it more of a animosity there, or is it a collaboration even still? How does that work?
So I think for some there's perhaps a sense of animosity, but not so much with us. I think the angle what Binance are doing is obviously interesting. I think the angle of CDFI doesn't make too much sense. I'm much more interested myself in kind of what FTX are doing. I think their rapid success is obviously very interesting, and I think there's kind of real space for DeFi derivatives. But I don't think there's much animosity that I'm picking up on. I don't know about you, Russ.
Well, I think the really interesting thing here is everything's moving in the right direction. 6 months ago, there was probably only about 5,000 traders who were even using the apps, or maybe 10,000. And all of this yield farming started with synthetics almost a year ago, and the past couple of months has been huge, obviously. We've probably now got something like 300,000 traders that are now comfortable holding their own assets in things like MetaMask or ledgers. They're comfortable holding custody of their own funds, which is brilliant because this means that the market size for decentralized exchanges has just grown massively. So I think all of the stuff is going in the right direction. The different technological solutions are interesting. There's definitely a spectrum with different trade-offs, and it depends what you're willing to sacrifice. And some of these DEXs that are popping up on other chains, it can be quite to the average trader. Maybe they don't care about the underlying technological solution, but there are trade-offs. So I do think we're going to see more and more people building decentralized exchanges, and I think the opportunities there are going to be brilliant. But yeah, no animosity on our end. We think the space is going in the right direction. We're still pure Ethereum builders, and we still think that roll-ups are the way to go, at least at the moment, because you've then got the underlying security of the Ethereum blockchain. You're not reliant on another chain, which you don't know what it might be in 6 months or a year's time. You don't know how that's going to fare. Whereas I think we can all safely say that Ethereum is going to be around for a long time. It's one of the large chains, and you've got a lot of people building on it. The tooling's improving every day. So I think we landed on zkRollup, and we can go into this later on. But it's really interesting to see other solutions pop up, because for certain traders with certain pain points, it might be a better solution for them.
I think it also highlights the importance of layer 2 projects kind of coming together and building, as fast as possible, but also responsibly on Ethereum, because the high gas prices, the congestion is maybe pushing some people to different chains. So if we can solve that, then we might slow that down.
Yeah, and there is certainly something to be said about kind of the sophistication of traders that could be operating a decentralized exchange, or maybe some of these more nuanced farming protocols, compared to kind of the audience of Binance, and how that audience might have just heard, okay, we can trade without fees. That's all we were really looking for. Whereas, that trading audience might not even be aware that roll-ups exist, and some of these decentralized exchanges are also providing those same features with maybe some additional functionality. Something that just stuck out right as soon as I opened the DeversiFi exchange was that it had an order book. And that's something I hadn't really seen on a lot of other decentralized exchanges, most prominently Uniswap. That was something that I was excited to see, because I hadn't seen it on a lot of other DEXs. What was kind of the reasoning behind going into an exchange with an order book rather than some of these other DEXs that don't have, some of that info?
Definitely. It's just a different market. I think AMMs such as Uniswap, Balancer are really, really good at bootstrapping liquidity for smaller tokens, and with some incentive models that we've seen as well, can attract a lot of liquidity. But you still have to have high fees. So Uniswap 0.3%, is the standard to incentivize those liquidity providers. So a trader who wants to trade in significant size is paying quite a high fee, paying gas, but that's not a huge portion of it if you're a large trader. And they can still get front run. Their trade can fail. It's not very fast. So this is maybe great. Say, for example, if you're an asset manager and you're willing to trade slower, or you're building a position over a longer time period, and you're not too worried about taking quick advantage of market opportunities as they arise, or the volatility of the underlying asset is so high that you don't mind giving up slippage and paying a high fee because, the token might do 100% overnight. Whereas we've gone down the order book route because it allows for a much more sophisticated kind of trader. So we can offer very low fee trading. And something that DeversiFi does is we aggregate liquidity from centralized exchange sources. So we can provide traders with very low fee trading with very, very good liquidity without any sort of trade-offs. So for example, if you go on DeversiFi now and look at our ETH/USDT order book, we're aggregating Bitfinex and DeversiFi orders. So you can trade with minimal slippage up to huge order sizes, paying as little as 0% maker fee, and you're not being front run, and it's totally private. So if you're used to order book trading and perhaps you've even got an advanced algorithmic strategy or you're a serious trader, Diversify is a venue that might appeal to you. Whereas,
Yeah, I think there's like a split between the DeFi degens, if you will, and then the traders. And I think the traders who are trying to actively day trade and swing trade, they prefer order books, obviously, per the capabilities. But I think the degens who are in and out, providing liquidity and farming, they just want a simple way to get in and out of assets to farm with or to hold or to flip. And so I think that's where like the AMA or the AMM comes in. And honestly, the AMM contributes to this house of cards with yield farming, if you will, the ability just to swap in and out to provide liquidity and then take it and take your LP tokens and farm is kind of absurd. And I've read a few Medium posts about the DeFi house of cards coming to a crash at some point just because of the adding up of all these collateralized debt positions. So basically, if you put in funds to say Aave and then you borrow some stable coins, and then you take those stable coins and you provide those stable coins with ETH to liquidity into Uniswap, and then you take those LP tokens and then you provide that to a farm, and then you take the farm tokens and you provide it, there. And so it's like this big circle of these collateralized debt positions as well as LP tokens all over the place. How do you guys feel about that, the house of cards, if you will, of DeFi? Do you see that as being a problem with all this lending and borrowing and farming? Is insurance, is that going to help? Is liquidity mining okay? I mean, there's a lot of questions here, but it comes down to the house of cards of DeFi and where this all goes.
Yeah, I think it's amazing to see, first of all, you can add any asset to Uniswap. You can, all of these different DeFi protocols, you've got your own control over what's going on. So it's fantastic to see. And obviously there's some bad stuff that goes with that, like rug pulling and people getting overextended. We've all had the horror stories around people who went max leverage on compound to yield farm, and then 5 seconds later there was a small interest rate differential or whatever, and then they got liquidated. And people who are FOMOing into smart contracts that are dodgy and aren't forked properly, etc. I think with the innovation always comes the scammers, but the innovation is just fantastic to see in itself. In terms of the house of cards, I think there's a lot of redundancy built into the system. I think what we probably will need to go through some shocks. So I don't know if you remember Black Thursday, what was it, February or March, when the stock market crashed and crypto came with it. On that day, you couldn't settle an Ethereum transaction without paying ridiculous gas prices. And I think even since then we've seen higher gas prices. So I'm really interested to see what happens when there is a huge spike down in Ethereum and Bitcoin do something 50%, it spikes down or whatever. How all these protocols cope when people realize that they can't get their funds out, or they're stuck in positions because they're now having to pay $1,000 gas to get a $500 position out. Which is why I think Diversify is adding something really interesting to the DeFi space, because traders are always going to be able to trade on Diversify no matter what happens to their gas price on main chain. So they can hedge their positions, they can carry on trading freely. So I think that's really interesting. And the arbitrage opportunities in itself are pretty amazing, because we're seeing traders now actively trading against AMMs using the fast high-speed liquidity of Diversify, getting their funds into Diversify pretty quickly, and soon they'll be able to get their funds out pretty quickly. So that's an important piece for price discovery and arbitrage in the space. So very excited to see everything develop over the next couple of months, but probably need a few shocks to make sure there's enough resilience in the system.
The innovation has undoubtedly been amazing. It's crazy how fast everything is moving to, and I think there's a lot of marketing and shilling going on of APYs and this ability basically to get rich quick. That idea, I think, is prominent right now in this space, which is unfortunate, but it is what a new market goes through. While it does feel like the ICO hype, it's obviously quite a bit different. But how do you guys feel about the APY shilling? Has DeversiFi done any of that? Is there any APYs to be had with DeversiFi or through Nectar Token? And then, what's the ethical boundaries of that? Is it okay to be flashing these super high APYs to get a bunch of liquidity on your platform, for these token distributions? Is it a negative thing?
I don't think we've had enough time yet to see how sustainable these liquidity mining exercises are. Because liquidity mining is essentially just giving away enterprise value or some value in the protocol, and it's just being done very aggressively at the moment. So I think it's going to be really interesting to see how many people stick around to some of these products once the rewards dry up. You saw the sushi swap. A lot of the liquidity just moved on to Moonswap and was it Sashimi? There's so many of them now; it's difficult to keep track. So I do wonder how loyal liquidity is going to be, and I think we're seeing it does move quite quickly to the next sort of big APY play. We haven't done anything like that at Diversify yet. We are examining lots of different ways of incentivizing sustainable liquidity. So we will probably be launching something at some point which incentivizes traders to use our platform, but not expose them to dangerous pools where there's ridiculous APYs, where people can rug pull, and you're a product that no one's ever heard of launching anonymously, and before you know it, then everyone's run off with the funds.
Yeah, I think as a concept, liquidity mining is pretty good, but good for long-term projects rather than kind of the fly-by-night ones that we're maybe currently seeing. And for Nectar in particular, kind of that concept harks back a bit to Nectar's origins back in 2017 when it was launched as one of the first. It wasn't called liquidity mining then; it was just called the Nectar reward token that was distributed to market makers on the old Ethfinex exchange, which is closed down now. And so that was for sustainability. It was for long-term growth of the Ethfinex exchange. It rewarded its most loyal traders with Nectar tokens, which were governance tokens and had all sorts of cool utilities. That was a crypto winter. So the phenomenal spikes of growth that we see now weren't really there, but over the longer term, it served a pretty useful function amongst our Nectar holders who gave us a lot of good feedback about it. So I do think as a concept, it's not going to go anywhere, and it serves best long-term projects, if that makes sense.
Yeah, that does make sense. And it kind of gives me an idea of how DeversiFi is positioning themselves in crypto as a whole, where I think Ross mentioned the arbitrage opportunities. And now that I'm kind of thinking about how DeversiFi aggregates liquidity, it seems like there would be, a number of different arbitrage opportunities as DeversiFi starts to integrate more and more sources. Is that true? It kind of, as you guys integrate more or aggregate more forms of liquidity from different places, are traders going to have an opportunity to see maybe crossed spreads, where they can arbitrage between one liquidity provider and another?
Yeah, I think that's one of the things that we're angling for with Diversify is, we're all about giving DeFi traders kind of the edge. So by aggregating centralized exchange liquidity, but allowing them to take that liquidity or use that liquidity without taking any counterparty risk themselves is really powerful. So we can be a bridge between on-chain and centralized exchange liquidity, which is really interesting because then you've got a very fast-moving, deep liquidity source for DeFi traders to then use to arbitrage against slower-moving AMMs or on-chain DEXs. So that's something that we're really, really excited about. And I think we're going to see that a lot more in 4 to 6 weeks when we announce when we have the instant withdrawal feature live, because at the moment, arbitragers have to wait to remove their funds from the exchange. But when they don't have to do that, when they can move funds in and out within a minute or so, I think we'll start to see the use on Diversify and the opportunities really explode.
Yeah, because right now the liquidity is fragmented. Well, it is fragmented in one sense, but what you said is actually, I guess, more accurate. It's moving faster in some places and it's moving slower in other places. And I think that is leading to the fragmentation of a lot of liquidity, which means that aggregating all of that and providing one interface is going to be powerful. And, some of these traders that might be priced out of DeFi, for gas fees or whatever reason, could find solace in a more actionable strategy, one where they're not priced out of the market. I've done some arbitrage trading before, and it's not difficult. It's pretty simple to get. You buy you buy lower than you sell, and you sell higher than you buy, and it happens all pretty quickly. So I'm hoping DeversiFi can I guess, add more liquidity partners. I'm not sure what the plans are there, but from my experience, it seems like the more liquidity providers, the more arbitrage opportunities. Is that a similar case that you guys have seen?
Yeah, definitely. And yeah, you understand how it works. So just having more pairs with different sources of liquidity will increase the arbitrage opportunities. But even if it's not arbitrage, even if it's just people want to trade without paying the high fees that you get with on-chain DEXs, because we're seeing more and more people now saying they'll never go back to centralized exchanges, which I think is really interesting. But at the moment, if you say you want to take advantage of the next yield farming opportunity, you need to switch your USDT into ETH or another DeFi token. At the moment, you really can only do it using, say SushiSwap or Uniswap or a centralized exchange to give you the deep enough pool of liquidity to actually make that trade. But you're still paying either a high amount in terms of trading fees, 0.3% plus gas plus slippage, or you're trusting your funds to a centralized exchange and you may have to wait for your deposit and withdrawal. So if DeversiFi can offer very fast deposits and withdrawals, very low fee gasless trading, whilst never taking custody of your funds, I think that will become really interesting for traders, for DeFi traders.
Right. And now that we're on the subject of the exchange and the trading, I'm curious as to where the Nectar token comes in. So in other protocols and previous examples, we've seen an aspect of governance. On Binance, for example, if you hold BNB, you get a fee discount. Now there's actually even farming with these governance tokens and BNB. So how does the Nectar token accrue value? Why should people own it? Is there any Ponzi-nomics, if you will, or is there any yield generation opportunities, or what are the benefits, whether it's in a monetary or a governance, or in what sense of owning the Nectar token, aside from just a price appreciation, what actually accrues real value for the Nectar token?
Yeah, I can take this one, Ben. So the Nectar token is a fixed supply. So it's not an inflationary token; it's a deflationary. It's got three main forms of utility at the moment, but anybody can propose changes to the utility. So the first is it gives you voting power in our DAO. So as Ben mentioned before, the Nectar DAO has got some of the larger Nectar holders staking their Nectar into it. I think there's something like $30 million of Nectar staked into that DAO now. And that's where all of the proposals that we discuss on Discord and Telegram are voted on. There's 17,000 ETH pledged to that DAO, so it's the largest DAO, because 50% of our exchange fees from our old exchange were pledged to Nectar holders. That's now controlled by the DAO. So that's the first form of utility. Second is we use up to 50% of exchange fees to buy back and burn the Nectar token in weekly auctions. So that's very exciting. So over the long run, Nectar's a deflationary token. The more trading activity on the platform, the more tokens are burned, same way as BNB or Leo. And then the third form of utility, which is just around the corner, is it gives you trading fee discounts on the DeversiFi platform. So fees at the moment start at 15 basis points for maker, 20 basis points for taker, and they go down all the way to, I think, 0 for maker and 5 for taker. But having Nectar gives you a discount on those. And then we're just starting to explore more forms of utility as well, as we start to build more DeFi features and integrating with more DeFi products. So there'll be more opportunities for staking in the future. And then as we spoke about briefly earlier, some longer term liquidity mining incentive programs also just around the corner.
Yeah, I think the cool thing as well is we've recently welcomed a number of fairly well-known brands to the Nectar DAO who we're working with, feeding ideas back and forth with regarding the future scope of Nectar utility. So yeah, I think there's a long road of exciting stuff in the pipeline.
Awesome. And I have one more question, and I think Andy might too, but we are running kind of short on time, so we can wrap up soon. I was curious because you mentioned that Nectar holders can create proposals and vote with their coins. One thing I'm always interested in with decentralized exchanges is the listing process. So is that something that's controlled by the DAO, or maybe if there are some other functionalities, if you could explain those as well, that come from Nectar holders, and some of their either votes or proposals. What have they done in the past, and what can they still do in the future to affect the exchange?
Yeah, definitely. So at the moment, we add tokens based on various factors like liquidity and community, and and what we can source very good liquidity for. In the past, we've used the Kleros decentralized token registry to check tokens to make sure they're in line with our requirements. They're not security tokens, etc. And that was something that we would love to bring back. So once the tokens passed that registry process where the Kleros community did all the fact checking and the distributed court system, we then had a community vote where holders of a Nectar token voted on which of their tokens they'd like to add to the exchange. So that was really good, and we ran I think about 12 rounds of that and added the tokens onto the old FNX exchange. We'd love to start something like that up again. At the moment, we're prioritizing building the new features on the exchange and really adding utility and making Diversify somewhere that traders really want to trade. But then I think over the next few months, we'll start to see more of not just the listing process, but other aspects of the platform becoming decentralized and community governed.
That's great. Yeah, the governance is certainly an important aspect, but I've also read articles and ideas that are contrary to that point in a sense of governance and governance tokens are worthless, which is a really interesting point of view to have. So I think you definitely need to have other utilities for tokens than just a simple governance, because the fact of the matter is not a lot of people actually cooperate and participate in governance. Now, you guys may see a bit of a different effect in the DAO, but for the most part, the people who own the tokens, they don't really do a whole lot with the token when it comes to governance. And so that idea of just, oh yeah, you can hold X, Y, and Z token for governance, like it's not worth a whole lot until it has other utilities. And in my opinion, that is some sort of cash flows, some sort of deflationary measure, as you guys said, as well as some sort of utility either to work in sort of yield farming or to be able to use for liquidity, which kind of comes back to the cash flow idea. So really solid that the Nectar token has other use cases than governance. I do believe that the governance will grow as a concept over the next few months and years. But for some reason right now, after being exposed to all these governance tokens and all these proposals, I've seen a real lack of participation, thus a lack of value just in a governance token.
Andy, the way I see it, I don't want to steal this question, so I'll be quick, but the way I see it is pretty much like equity and tokenizing equity. And if a company doesn't have a revenue model, then that equity, really has no value proposition, which I think is kind of what you were speaking to.
Yeah, so I was just going to say, so a token needs like a cohort of utility to work, together for it to have that value. But on the governance side, I think the key is just finding the right stakeholders who do have interest in the future of the exchange or whatever the protocol is and are active enough. So I think it's a matter of enfranchising the right people, and also enfranchising perhaps smaller holders through things like coalitions and delegation and stuff like that. But in general, DAOs, they've been around for a while. There's a lot of incredible work being done by DAO Stack, Aragon, some others, and I think in time we'll see a really interesting growth rate for DAOs in general, and people will become much more interested in participating. Find their communities, and I think that will grow in time. But I do hear what you're saying, that many DAOs they haven't passed yet a threshold of activity.
Right. It's a growth thing, and I think it's so crazy how the tokens have evolved from 2017, where you could raise money with a white paper for say what was that one coin for the dentists? Oh my goodness, is it DentaCoin? I think it was DentaCoin. Yeah. The only use case was to be used for transactions for dentists. Why can't we just use Ethereum, right? So it's like that token had that was the only case, I believe. And now you've got tokens that are governance and utility and cash flowing and all sorts of things. And now we're sitting here still just kind of like, man, these tokens need more. It's just super cool to see that development from 2-3 years ago, and then now, and then what our token's going to be used for in 3, 4, 5 years.
Yeah, I completely agree. I mean, 2017 gave birth to so many questionable tokens. Obviously, many just cash out on the buzzwords and the hype. But amongst those, there are some legitimate tokens who are working on some amazing things. So I guess we've still got a consolidation phase to go through in DeFi and crypto in general. But yeah, I mean, there are some amazing things going on out there at DAO Stack, at Yearn, at Aragon, and various others.
Awesome. Well, guys, it has been an absolute pleasure. Ross, Ben, Rob, this has been solid. I know the listeners have got a lot out of this. We really appreciate you guys coming on and speaking about DeFi and Diversify. Really good stuff here today, guys.
Thanks, guys.
Cool. Yeah, thanks. Appreciate.
Great, Andy. Thank you.
Appreciate having us on.
Yep. And that about wraps us up, guys. Thank you for listening. You guys have a great day.
Thanks for listening to the DeFi by Design podcast. Until next time, DeFi Slate Team.